Good afternoon, everybody, and thank you for joining our latest webinar today, which has been positioned across 3 of our 4 media brands. So we have boutique hotel news, service department news, and short-term rentals here powering today's conversation. And we're here to talk about a very contentious topic, very debatable topic, that is the tourist tax and what's going to be happening in England. And more importantly, what our audience here today need to know about how to prepare and what impact this might have on their business. So my name's Eloise Hanson. I'm your host for today's webinar, and at IHM, I am the editor of Hospitality, which firmly gives me boutique hotel news and service department news. And we are 2 trade multimedia platforms covering boutique, lifestyle, luxury hotels, branded residences, service departments, apart hotels, extended stay and serviced residences. My colleague Priya Kaira, who's the editor of Short-Term Rentals, I would highly recommend, if you haven't already done so, connecting with her too. I'm sure her LinkedIn profile will be popped into the chat for you. So a brief overview of how today's webinar is going to run. We'll spend around 45 minutes chatting with our panelists today. And if you do have any pressing or urgent questions, please submit these using the Q&A button or the chat button at the bottom of your screens. And I will do my best to weave those questions into today's conversation. We do have a lot to get through, and I'm very aware that I'm sure you'd appreciate your pressing questions to be answered live. Everyone that has registered will get a copy of today's recording along with a written summary of all the key takeaways. And should you have time when you leave today's webinar, a short survey will pop up on your screen. Any feedback is highly welcome. We're always looking to improve what we do. So why are we here? Here's some headlines that I've pulled from online. And there's certainly been some mixed responses to the proposed tourist tax here in England. And on one hand, supporters of a tourist tax argue that it could generate vital funding for destinations. Bournemouth Council says a levy could support its ambition to become a stronger year-round destination while easing pressure on local transport, healthcare and waste services. On the other hand, opposition to a tourist tax has emerged in Devon, where local MPs and tourism businesses warn that additional overnight charges could actually deter visitors and damage seaside economies that rely heavily on seasonal tourism. And in the final headline down here, where staycations are already too expensive, the tourist tax will make it worse. I'm going to quote Jonathan Ida, who's from the Taxpayers Alliance, who said, "A tourist tax is not a growth policy, it is a deterrent. Taxes change behaviour and taxes on tourism are no exception. Cities such as Venice, Amsterdam and Barcelona have used tourist taxes to reduce visitor numbers. Britain should be doing the opposite. With a 20% VAT rate already inflating the cost of tourism, the UK is already at a disadvantage. We should be encouraging more people to visit, not scaring off visitors." And on the next slide, we can see what's been happening further afield from the UK. So within the last week or so, I believe, Venice is considering increasing its tourist entry fee from €5 to as much as €50 as part of efforts to manage over-tourism. And the current tourist levy has raised millions of euros since its introduction, but it hasn't had much effect on actual visitor numbers, which I think highlights an ongoing debate whether tourism taxes are more effective at raising funds or reducing demand. Amsterdam is also proposing a significant tightening of its tourism strategy, including raising its tourist tax from current levels towards 20% by 2030. And the city argues the changes are needed to balance high visitor demand with pressures on public space, infrastructure, and residents' quality of life. And this year, even further, Japan is expanding the destinations where its accommodation tax will apply. and will also triple its international departure tax from this July, again as part of efforts to fund tourism infrastructure amid rising visitor numbers. So there's a hell of a lot going on. Let's meet our speakers, because these guys are much closer to this topic than I am. They know exactly what's going on, and I'm going to ask each of them to introduce themselves from left to right as per the PowerPoint slide. So let's kick off with Alan. Welcome, and over to you.
Hello, everyone. I'm Alan Simpson. I'm the Chief Executive of UKHospitality, who are the organisation that, alongside amazing organisations like the Short-Term Accommodation Association, work on behalf of the sector to try and improve the political environment in which we operate. My own background, I was in banking for many years, and then I went to an organisation called London and Partners, which, amongst other things, runs Visit London.
Brilliant. Thank you, Alan. Janet, over to you. Welcome.
Thank you, Eloise, and thank you, Alan, for those kind words. I'm Janet Utley, new in post as the Chief Exec for STRz. At STRz, we represent the entire ecosystem in short-term lets. So whether that's your professional hosts, your individual owners, or the platforms. And we bring together all of those voices to make sure that we can lobby and talk to who we need to talk to get the voice heard for the short-term accommodation sector. From my side, I come from a very strong tourism background, having recently left Visit England. So I've seen this from the other side, as it were, around an arm's length body, and how some of these changes affects what goes on in promoting the country.
Thanks, Janet. Robert Jan, over to you. Welcome.
Hi, everybody. Yes, my name is Robert Jan, RJ for my friends. I'm, as you can see, based in Amsterdam, Managing Director of Hotel de l'Europe, an award-winning family-owned hotel in the city center of Amsterdam, actually owned by the Heineken family, which makes us sort of like the last family-owned luxury hotel in Amsterdam. But as you probably have heard, we are being what should I say, influenced, maybe is it the right choice of words, slightly by increased taxes. And I look forward to our little 1 hour together to give you perhaps some more insights on what effects VAT and tourist tax has on visitors, but also on the impact of your own P&L.
Thank you, and I'll shift to RJ moving forwards, because we're all friends here, aren't we?
Absolutely.
And Tony, over to you. Welcome.
Thank you, Eloise, and it's a pleasure to join Alan, Janet, and Robert Jan, or RJ. I'm the founder of Integrity International Group, and I have spent the last 40 years designing, building, operating, and managing hotels, mostly in central London. So I've got stake in the game. I've also founded Central London Alliance, an alliance of different businesses that was the purpose of which was to regenerate London post-lockdown and the COVID-19 virus. Unfortunately, 7 years on, we're still facing challenges, and we could do without another one.
Thank you, Tony. And all the LinkedIn profiles of our speakers have been popped into the chat there. Like I said, we've got a lot to get through today, where we might not quite touch on everything, but their profiles are there. Please connect. Please carry on today's conversation after today's webinar. So let's kick off. And this is going to be a general question to all of you, and I'll come to each of you individually, and I'm going to reverse the order. So we're going to come to Tony first. What do you think, Tony, is often misunderstood about how an overnight levy will actually work in practice?
That's a big question, but I think probably adequately dealt with by one of the summaries that you introduced at the beginning, I think Jonathan Ivers. So raising funds and decreasing demand. So the thought is that there will be no impact, rather complacent view, or minimal impact on this imposition on what I call a hotel accommodation tax, because I don't think it is just a tourist tax. And I think we need to get our names right. It doesn't affect or it doesn't directly impact on museums and galleries and theatres and so on. But it does hotel accommodation providers. So we should say it as it is. And it's still unknown as to the extent to which other providers are going to be included in that, the Airbnb, so the corporate housing and student housing and so on. So that there are quite a lot of unknowns. But the decreasing demand on top of the evidence that already suggests that London in particular, and I speak really for London more than I do for the UK's hotels. So Alan, I'm sure, can speak well for the UK hospitality. But London has been the saviour of the capital, and its hospitality business has been the catalyst for investment, productivity, vibrancy, animation, and stimulated the economy whenever there's been challenges in 2008 and so on. So I think the country and the UK benefits from a vibrant, living, active hospitality provision. And the decrease in demand, some call it economic illiteracy because it's ignorant self-harm. I think two phrases that have come up regularly. The world's greatest city, in my view, is losing its sheen. And the hospitality culture and visitor economy are critical for that, and for the capital and the country's identity and its vibrancy, and also its financial well-being, because the beating heart of London and the hospitality sector in particular provides funding that goes to Treasury that helps the public services across the country. So we must avoid anything that risks damaging that.
Mm-hmm. Thanks, Tony. RJ, what do you think is understood or misunderstood about a tourist tax, or how this overnight levy is actually going to work in practice?
Well, the misunderstanding, I believe, it really is the impact. In Amsterdam, the central, the country's government basically raised the VAT on rooms from 9 to 21%. That is a dramatic 133% increase of VAT on rooms, and that's a tax which is included in the pricing as per the European law, and in particular Dutch law. So theoretically, if you take inflation and that raise of VAT, you need to increase your rates with 15%. We all are working with dynamic rates, so obviously the impact of the world situation then drives today's rates a little bit down, and so it impacts your P&L. That's one side of the equation. On the other hand, we have a city government which is let's say sort of left of the center, which needed to close, I believe, their budgets, and is now raising tourist tax. We have to realize that tourist tax used to be around €6 at a fixed rate, became €6 plus 6% of the room rate, became 12.5% early this year, January 1st, and a year later, now it's being raised to 16, and then every year a percent more to 20. So in the end, somehow we are adding 41% on our room rates for the consumer. That obviously is detrimental for the international positioning of Amsterdam as a destination. And if you just maybe look at, you could say, well, you know what, VAT, you could claim that back for at least the professional part of the visitors. Mm-hmm. But for tourists, that's gone. Now, city tax is a whole new other subject, because you cannot claim city tax back as a conference organizer, for example. So one may debate, okay, so what's going to happen to the Rai Convention Center when major, and I'm talking really major, citywide conventions are being reconsidered because of tourist tax? I mean, you can 20% on the room rate for 10,000 visitors for a week in Amsterdam. That has some major impacts, both on the organizer side, but also on the visitors. And then there's other cities that say, hey, you know what? We roll out a red carpet for you. Come and organize your convention in our city, and we will waive the taxes. So there's also not a level playing ground. So that is a long answer to a simple question, and I'm sure you'll have more questions. So I'll try to keep it relatively short. My answer, as you can understand, it's quite passionate, and I'm personally deeply involved in trying to facilitate the debate, because I understand that the city has a budget to close, and this is a nice tool to combat the over-tourism debate, but it's more about spreading tourism and making the right choices in which visitors you would like to visit your city.
Thank you, RJ. Janet, your thoughts, please.
Yeah, I would say that there is this perception that a levy, it could be easy money, that it could bring money into the coffers for our local authorities, for our combined authorities and for government. But I think they forget the administrative burden that it creates, both sides. I think RJ touched on it, that it's not just about how the operator themselves has to administer this levy, but it's also how the collecting body has to administer that money that comes through. We are quite a complex industry. Tourism and its many strands. We have many different offers, and it's how you cannot do a one size fits all here. It is very, very complex. We're already seeing, so for Wales, for example, who have decided to do a fixed rate, which is great news, that fixed rate, but it's a £1.50 versus a 75 pence. And what's that little bit in the middle where you might fall between the cracks? It's the issue here of making it simple. But if you're going to do this, you've really got to understand what it's like front line. So I think the other concern that I have, and speaking to those areas, certainly in England, that have already, through their tourism bids, their A bids, have got things in place around a levy. The frontline staff are the ones that are suffering. They are the ones that are trying to bring in those customers, bring in those visitors that arrive with their own baggage. They might have had a terrible journey on the way. They might have had the most awful public transport issue. And they get to you and they're stressed already. And then you're hitting them with another amount of money that you're throwing on that they might not have budgeted for. And there is that issue that you're dealing with the quality for the visitor. And then, of course, on the flip side, and what affects very much in the STAR membership, you may not have a reception area that can collect this. So actually there is no contact with a physical person. And if you are a visitor and you're confused by it, who are you going to speak to? And I think it's those things, it's the complexities of how these work actually in situ that needs to be factored in. I also strongly feel that you need to understand what the problem is before you try and find a solution. And I think there have been many conversations around this will help with over-tourism. Will it really? Will it really solve over-tourism? And are we really across the UK in all spots in a position where we want to limit the number of visitors we've got coming to see us? I mean, I've had conversations recently with place directors who are telling me, well, we want to turn our day visitors into overnight stays. Oh, but we're going to put a levy in as well. Well, actually, let's be careful here. Don't price yourself out of the marketplace. If you're looking to grow those overnight stays, don't look at putting in yet another barrier. Look at simplifying that. So I'd say it's not easy money. There's a lot that hinges behind this that needs to be thought through first.
Thanks, Janet. And Alan, what are you going to bring to the table here around misunderstandings?
Well, look, a lot of good points made, so I won't duplicate, but I will come back to where Tony started with the idea that actually, you know, this is painless. Nobody pays this, but of course people do. And half of the people paying it will be domestic visitors. To some degree, one of the reasons this tax is so attractive to mayors is because of the sense that if you're the mayor of Liverpool, you can tax other people for money to spend in your city. The problem is we're all other people. So what will happen is that the price of a holiday for a domestic family in the UK will go up by about £140 on average a head. For some, much more, for some less, but on average £140. So this is a direct cost on families in the middle of a cost of living crisis. It also has the effect, interestingly, that unlike almost all taxes in the UK, where the Southeast pays more than its fair share and it gets distributed in Manchester and Liverpool and Leeds and other places, more people from Leeds go to Manchester than people from Manchester go to Leeds. So people in Leeds will be paying a tax to Manchester disproportionately. More people from Manchester come to London than Londoners go to Manchester. So we will find that actually this is a rare, in fact, the only tax where there are big losers there are big winners for the mayors in the biggest cities and big losers everywhere else. So weirdly, if you're Liverpool, if you're Leeds, you're about to lose an arms race against cities who are able to raise significantly more than you. And you'll be doing it off the back of hard-working families.
Thanks, Alan. I'm going to come to RJ now, because he touched on this at the beginning around the how this is truly affecting that P&L. And RJ, you mentioned that the VAT is rising, tourist tax is rising incrementally over the next few years. What are you seeing in terms of those real impacts within the hotel? Occupancy, ADR, and pricing, really?
Yeah, I think first of all we need to talk just a minute about the effects of this famous new term is over tourism, and as if we can increase or steer tourism and the number of visitors. I personally believe that is a dream, because you just take a mathematical law. Number of inhabitants in any country in the world is increasing. The amount of free time per person in any country in the world is increasing, and the GDP in any country in the world is increasing. You take those three factors together, you will get increased tourism no matter what you do. So people will travel more. So that's good. We all live in a blessed industry, which is fantastic for all of us. Let's also look at the positive news. But yes, I mean, from a P&L perspective, although I'm not quite aware how it's calculated in the UK, but here the tourist tax is on top of the room rate, and officially you don't have to show that in your price offering, whereas we do, because I do believe that transparency is important. So the amount of tourist tax is not something that directly impacts my P&L. Where it does impact is the overall result of the amount of visitors to Amsterdam as a city. Therefore, you may logically think that maybe we'll get less visitors. In our case, let's face it, I mean, we're looking at an ADR, average daily rate, of approximately €1,000 per night. You add 20% to that, you spend an average of 3 nights, that's €600 of tourist tax. Now, how does one explain that to a daily visitor? I could maybe think that, let's say 1/3 is used for cleaning purposes. Let's keep Amsterdam clean. 1/3 is for making sure that we run a safe operation here, and 1/3 for the city's well-being. But the city here doesn't really want to, what they call, earmark the income, which is also a bit weird. So the tourist tax doesn't really impact, to come back to my initial point, the P&L, but yet it does. The VAT has a direct and detrimental impact on the P&Ls of my hotel, but I'm also in the board of the Luxury Hotel Association of Amsterdam. The same for all my colleagues, and the same goes for the 3, 4, and eco hotels, 3 and 4 star hotels. So there's not a clear-cut answer. So VAT, direct impact, yes. Detrimental. Tourist tax, it's a secondary impact because it's added on the price, but because of the steering and what they think, which will steer an amount of tourists, the impact is less, but I think it is detrimental, in particular for the professional tourism. So the congress market, they are going to feel that. And that is a huge amount of visitors into the city of Amsterdam, because Amsterdam is so popular, like Barcelona and Madrid and some other cities. And I guess London as well. I should not forget the UK. Please forgive me. But yes, we're running a really rough show in a climate which is very uncertain, and so we see that we get less visitors from the Middle East, we get less visitors from India. Luxury travelers overall are a little bit hesitant to book their flights. Everything is last minute. You cannot forecast, or at least it became a lot more difficult. So running a tight P&L is very, very complicated nowadays, and it complicates our lives. Do you hire people tomorrow or not, or in a week or in a month? And so yeah, it's a rough show.
Janet, your hand is up.
Yeah, I'd like to just add here, because I think that's really valid points that RJ's raising. We've got to remember from a UK perspective that we use our big tickets of London or Scotland or Manchester that have been shown to have, real resonance internationally. We use them as the tool to market the country, and then work very hard, which is done within, obviously with Visit Britain and the work that they do, to disperse that out into the regions. Now, if we start to affect who's going to see it as attractive as to come to London and then go out into the regions within their visit, and we are adding different levies, that's going to affect whether they're going to actually truly do that. And all of that work around sharing that money coming to one part of the country will be affected. What we know is that people will book the length of time they want to be in a place, and then look at, well, what could be the add-on after they've done the big sightseeing bits they want to do. Well, actually, if you're suddenly thinking, well, it's going to cost me this, it's going to cost me this, then I've got to do this. Oh, actually, that's going to affect how my money can be spent. I'm going to stay here and I'll just focus in this city that I've landed. And I think that's the other thing we have to factor in here.
And if you take it a little bit more micro, so if you look at London or let's say Amsterdam, now imagine that these guests are going to say, hey, what, I'm not going to stay in Amsterdam, I'll go to Haarlem and stay there. So now Haarlem gets the tourist tax, we get the tourists, we get the burdens, we need to clean the mess up, but we don't have the funds. So it's again a rather how should I say this properly, complicated issue that will in the end only cost more money to the city.
And I think that point about unintended consequences is very well made. First of all, it's unknown, and I take the earlier point about the burden, but actually, what's it for? So what's it for? Is it to raise money? Is it to suppress demand? What actually is the purpose of it? And I think we can guess that it isn't actually to suppress demand, because the so-called mantra is growth and stimulation. That we've, irrespective of the fact that we've not seen it, if that is the governance mantra, then it must be raising money. But we've seen, and we don't need to be a rocket scientist to realize that if you increase taxes, take employers' national insurance, what happens? You decrease demand. It's a pretty straightforward thing. So, you increase your costs, you reduce your demand, and what's it going to be used for? And it's this thought that we don't operate in a globalized, internationally competitive world is completely ill-conceived. Just like if you withdraw tax on visitor spending here on the VAT, so duty-free, what happens? The argument was that, and this was a previous government, the argument was that, well, we're losing 20% of tax on these people that are coming and spending money. What's the result? The OBR will confirm it, that actually less people are coming, less people are spending, they're spending the money elsewhere. Those two examples, and there are multiple others, the non-dom tax, the 16,000 millionaires that have left London, capital gains tax and other duties, levies, regulation. If you start imposing these things, one, they have a negative impact. It's a quite straightforward thing. And two, the agglomeration the collective impact of all of these, particularly in something that has soft power like tourism, is that we're not wanted, and they don't want us. It's a demand suppressant in an inadvertent way, and the 500 million pounds annually that the UK benefits from just disappears, whilst international competitor cities, Switzerland, Singapore, Italy, attracting individuals and trying to encourage conventions, events, local spending and disperse it. We've got an air passenger duty. We've got a disproportionate impact, and I take exactly what was said earlier about London being disproportionately impacted. A large proportion of our balance sheet, to use RJ's words, are in property, and we already have business rates and stamp duty and other levies that disproportionately impact London, and our rates to customers are higher, so the impact is going to be proportionately higher. If we keep on squeezing this particular pip, some harm is going to happen, and we've seen it with the exodus and a reduction in employment as well in a sector that has always been the catalyst to encourage people to invest and stimulate economies post recessions and upheavals, and we are right now in a very globally uncertain world. So I say it's the wrong thing to do, and it's the wrong thing to do it now, and it will have unintended consequences. But we can look at other measures that are on tax and regulation that have done the same and haven't got us further forward.
Thanks, Tony. Alan, your hand was up. Is there anything you wanted to add here, or
no? Tony made the points I was going to make pretty well.
I'll just add one point to Tony's, and I think you mentioned it, but let's not forget that if we get less visitors, if we get therefore an impact on your P&L, look at it from an owner's perspective, an investment perspective. How on earth do you expect people to upkeep the quality inns or luxury hotels versus a decrease in P&L or maybe the threat of a loss? And then how do you want people to invest in your city or in your destination? So I think that can be quite detrimental as well.
Janet?
Yeah, I would quickly add in here also, we've got to remember about the businesses that rely around the accommodation sector, around the hotels, around the short stay accommodation people. We are a really good driver in terms of money into a destination. And if you start taking more and more and more from that visitor, there's less for them to spend in the destination, there's less for them to spend in the pubs and in the restaurants and going to the visitor attractions. But also it just means that you have decreased the size of the potential of that visitor's spend in destination for the sake of something that actually has created quite an administrative burden, both sides.
Thanks, Janet. I'm going to bring Alan into the conversation now, because I would be keen to hear what is being debated and within at government level, and what is it that the local authorities are deciding on? What's that sentiment?
Well, I think, look, fundamentally, we have to remember that there was the pathway from where we were to where we are now is worth sort of starting with. The government said that they weren't going to do this. They put that in writing. They confirmed to the House of Commons that they weren't going to do it, and then they did. Why did they do it? They did it under pressure from the mayors who, frankly, need the money because austerity has hit local government hardest. The government's consultation response lands in the next couple of weeks. We don't yet know for certain what's in it. We're fairly confident it'll be a percentage, although we don't know that for certain. That is good news for London if you're in the business of raising money as the mayor, because clearly a 5%, say, if it's an Edinburgh size thing, of a stay at Claridge's is more than 5% of a stay in a small budget hotel in Leeds. But it does mean that you're raising the maximum amount of money. So economic analysis suggested if it's 5%, that'll be about 33,000 jobs lost, something like that. but we don't know exactly how much, and we don't know for certain whether it's a percentage or a per person per night. We also don't know who it's going to be on. There will, I imagine, be some exclusions. So I don't think the government are intending to put any levies on, for example, people staying overnight in a local scout hut, which is for the purposes of the law accommodation. But would they include holiday parks? Rachel Reeves regularly says that there's no intention to put a tax on holiday parks, but we have also been told that that doesn't mean that they'll be excluded from the law. We don't think that the mayors will have an awful lot of optionality in terms of what it is on and what level it is. So we think that's all going to be largely in the primary legislation. And then thirdly, and to the point that others have made, the extent to which the money is hypothecated. So I would argue to some degree that doesn't matter because you can't effectively hypothecate tax. So you look at Edinburgh, for an example, where the council said, where we're going to require that this money is largely spent on tourism relevant activities, whether that's direct promotion or improving the product. A lot of it has been spent on social housing on the basis that people who work in tourism live in social housing. Now, that case could equally be made of retail or of care or of education. It's very difficult to suggest that it's in the direct benefit of hospitality. So, look, three things we don't know: how much it's going to be and how it's going to be calculated, who it's going to be on, and the extent to which it's hypothecated. But I think we can be certain from an outside possibility that it's 1.6 billion pounds in tax in total. It's probably going to be a proportion of that rather than all of that.
Thanks, Alan. And Janet, you've touched on this already a little bit, but to Alan's point around, and I think actually Tony mentioned this earlier, that we should call this the hotel tax because this is on accommodation, but we're not sure whether all types of accommodation are going to be including in this measure or not. So how might this proposed tax proportionally or disproportionately affect all the different accommodation types that fill up hospitality, that contribute to hospitality?
Well, it's very unlikely that it would just be a hotel levy. Very, very unlikely. Although we've seen T-bids and A-bids run with something that is accommodation only, and mainly it's the hoteliers in the cities that have these. For something like this, it's going to be all accommodation. And again, that goes back to, well, in terms of that all accommodation, where do you draw the line? And scout huts, I think, as Alan said, it's an interesting debate, really. I think in terms of how this will affect the operators and where it becomes unfair is if you are a very small business and you have two of you working that business, you one-man band maybe, to create another layer of complexity of a levy and the confusion that could lie in that when it's not clear how that will be, it's where we're starting to see businesses step away, and we're seeing operators say, do you know what, I did this as a retirement thing, I really, it was a lifestyle choice, I'm not really interested in all of this big business, it's too much for me and I will just stop. Now that's a loss of what I would say great product. That means that it's going to affect an area's ability to have great accommodation offer if they suddenly become a city of culture, or they have a big event visiting like a Tour de France and they suddenly need that bed stock, and that won't be there because it's that very operator that may well go. I think in terms also that you were keen that I mention what it's like in terms of administration for the platforms. So talking to our members, and we have the big platforms within membership, they obviously are watching this very closely and have concerns around what it will actually be, and say that if it is a very a simple percentage or a per night fixed fee, that's easy to calculate and they can help the operator by collecting the money at the point of booking. But if it becomes a per person or something a little bit more complex, or it's expected that the booking platform will pay the local authority or the mayor combined authorities, that is too complex, and that in itself would be almost impossible to do. So I think it's those things, again, we're going back to that simplicity and of whatever it could be, being very clear that how it's collected is easy and what is collected is easy. And so I think I know UK Inbound did some modelling around looking at sort of a per night, depending on what you charge, and that could be another thing. But again, that's another layer of many complexities when that visitor is sat there trying to book somewhere to stay. It's just adding in too many layers.
Tony?
Well, I'd like to just pick up on a couple of the points that have just been well made. The first thing is unfairness. I'll come back to that in a moment. And the second thing is it will not fix the government's finances. If they think that growth is going to be stimulated by this, if they think that suddenly money is going to come flooding in, and then they'll be able to satisfy the economy's ills, that won't happen. So we already know that it's going to cost, and I think this is UKHospitality's numbers, £514 million extra for UK domestic travellers. This is an industry that produces £93 billion to the UK economy and 54 billion in tax. So we're already, despite being the third largest employer, we're already paying more than our fair share. So on fairness, I tackle that as a sort of broad concept. But going a bit more literally into the fairness of London, and you were describing the private sector. All of the big trades of hotels in the last couple of years that have happened in London, that's the sales of hotels, have gone from private enterprises either to global concerns or to private equity. And that is diminishing and diluting the diversity in our economy, in our hospitality economy in London, exactly as described. People are throwing in the keys and say, why bother? And you add to that the other, and I talked about the agglomerated effect of business property tax relief, that is now going to be removed. If you pass on and scale up your business, actually you're going to be disadvantaged and you're going to be taxed on it. So, of course, global concerns and private equity, they don't have inheritance tax to consider. Their menu and their script is a very different one. So if we want to preserve and protect diversity and the competitive nature of our hospitality sector, the London hospitality sector, and in its comparison with other capital cities, then we've got to do more to encourage it and stimulate it, animate it, and not actually to kick it as a golden goose that will just keep complacently providing the golden egg. It won't happen.
Staying with you, Tony, for a moment, because I'm aware you've got quite a few properties in London, and listening to today's panel talk about the complexities and the challenges of how this is going to be potentially rolled out, particularly to Janet's point, the administrative burden that this will have on operators. How are you preparing to be compliant? How are you working with your tech providers, and how is this affecting, bearing in mind where you have hotels, you also have service departments, so these are different asset classes as well, which will affect hotels and service departments very differently. What's been your journey thus far?
Well, in the broader context about consistency, when the Chancellor talked about growth and wiping the slate clean first, and not coming back to us with more taxes, clearly that wasn't and hasn't been the case. So there's an inconsistency in government policy or regulation or tax, impacts on investment and impacts on the money that's brought into the country, and it flows in a different place because capital flows can go elsewhere. So that's the big issue about consistency. If you talk more on a micro level about the consistency on a hotel accommodation level or hospitality or accommodation levy, the issues are that it won't be applied consistently necessarily across all classes in the same way. And for systems, that will be an absolute nightmare. And it was correctly stated that if small private operators find it too much of a burden, they'll throw the keys in, and that'll be it. They don't want to do another thing. They've had recessions and COVID, and the last 2 or 3 years have been difficult. It's tricky to get employment, business employees. The business rates are increasing, etc., etc., etc. It's one more impact, an unnecessary impact, and that is not needed. It isn't going to be the savior of the UK economy. It's not going to be the savior of the London economy. It's not going to get more houses built or the roads with less potholes and the streets cleaner. We already, to some extent, are taxed at that level anyway. So anybody who's in a business improvement district pays a supplement on their business rates, which are already high and increasing higher than any other sector. So we already pay an additional levy in order that we can make our areas cleaner, safer, a better place to live, work, visit, and invest and study. So that's the mantra of the business improvement districts that are already imposing a levy on top. We don't need to have yet another tax or another levy. It could be the straw that breaks the camel's back. Already we are seeing private independent hotels just moving quietly away.
Thanks, Tony. RJ, I'll come to you again to sort of almost compare from an operational perspective what is happening at property level. And I want to talk about the readiness of systems in order to actually apply said tax, particularly property management systems and how they price it in. Could you talk us through any changes or adaptations that you've had to make, maybe working with your PMS, and talk us through, I think you mentioned earlier actually, that your tourist tax is charged on top of room rate and you're very transparent with including that in the rates, but I'm more interested in the decision-making process behind that, and that's clearly not applicable to other hotels. They don't have to be as transparent as you. So talk us through system readiness, how have you worked with your providers, and your reasons for doing so?
Yeah, so it's all got to do with a level playing ground, right? So we in the Netherlands, and particularly in the Netherlands, consumers are being well protected, and rightly so. So it's mandatory to showcase your rates inclusive of VAT. So the idea was to see if there were any sort of mazes in the net to get out of that, but that showed that was impossible. So now we do have a net rate. We immediately show, okay, on top of that we have so much VAT, and then you pay so much. Then when you are interested in the booking, you will click, and then we'll get you another a window that shows you, okay, but oh, by the way, there's also tourist tax. So in the end, you'll pay all included. We don't want to hide that, because I think that's not a fair thing. Even though, according to the law, we could just showcase, our gross rate and add VAT on checkout. I think that will only lead to misunderstandings. From a systems point of view, of course, we had to update our PMS, which in our case is Synexus. That was a relatively easy thing to do for the VAT, and then for the city tax, it's more Opera and our internal accountability. So that was a way. So altogether, I'm not sure if I'm making total sense. It was a complicated show because you had both VAT and then city tax being risen. Of course, we managed it because you have to manage it. You've got to run a legal operation. It was very complicated to get all parties concerned to abide. And then let's not forget, we have our dear friends, the OLTAs, that again is a whole other debate, which I will not open up. because in the Netherlands we have our OLTA friends that even charge us with commission over VAT. More perverse than that, I cannot think it up, but that's the reality of what we have to deal with here. So a complicated show. Looking forward to how you will solve that in the UK. And I think, was it Tony? You said 5% is an acceptable tourist tax, or no, it was Alan. But I wonder what would happen in the UK if it became 20%.
We had a question from the audience earlier, RJ. Okay, we'll come to Tony and Alan shortly, but whilst I'm with you, I think this is when you were talking about the dispersion of demand. Do you think that hotels outside of the city limits, but within commuting distance of Amsterdam, will benefit from this because they won't have to pay tourist tax?
Yes, I do. In particularly, let's say in mid-scale and eco hotels, I don't believe that when you run a very upper luxury hotel, the impact will be very less. Really, I mean, the Claridges, whether the tax is 5, 10, or 20%, people will still come and stay there. But if you need to make a choice on your travel budget, and we've had several people on the panel referring to that, now there it will make a true balance. And so then you're going to say, am I going to stay in Amsterdam or Haarlem? Okay, I'll stay in Haarlem, but then what am I going to do with my time? I'll spend my time in Amsterdam visiting the cultural institutions, the musea, the nightlife, the restaurants. So then Amsterdam will not have the benefit or the tax, but it will have all the burden, the visitors, the cleaning, and so on. And that also will impact. So it may benefit cities around us, but it will definitely not benefit Amsterdam as a city. Quite perverse, isn't it?
Thanks, RJ. Tony, your hand went up, and I think it was when RJ was positioning whether a UK would it be a 5% tourist tax? What would this look like if it was 20%? I don't know whether that's why you raised your hand, but that's sort of where we were.
Again, putting it in context, yes, thank you. It wasn't because I wanted to discuss the percentage, but actually I wanted to discuss the fact that there are already disproportionate burdens on the UK hospitality and in particular London. So when we compare VAT rates, Germany at 7%, Ireland at 9%, of course, we're already uncompetitive compared to them. And they may be able to afford some form of levy or additional supplementary tax or regulatory charge. But London is already burdened. The UK is already burdened. And we shouldn't forget what was discussed earlier about behavioral change. We can't always predict what will happen with people's behaviors. And it may be that in RJ's case, that people will come to London, but then disappear off outside. The more likely case, in my view, in my estimation, is that people won't come to London and then they get 100% of nothing and they'll go somewhere else. And we've seen that with just the small thing, relatively small, about VAT on duty free. People shied away from London, went to Paris and Milan. And if they did come to London, they didn't spend their money here. They weren't in the expensive restaurants and the bars and the luxury hotels, or they curtailed their stay and they spent their money elsewhere. And this is going to be yet another burden. So I don't agree with it, and I don't agree with the 5%. And the collective cumulative effect of the burden of VAT at 20%, plus this, when London needs to remain attractive and competitive and accessible, and is the gateway city for the UK and the source of industry and global competitiveness that the country can offer, we don't need this.
Thanks, Tony. Over to Janet.
Yeah, I'll just quickly add, because I think we're running close to time, aren't we? Absolutely, what Tony just said around the tax on that not being claimed back. And I would say, RJ, when you say high net worth individuals are not concerned about the bottom line, I think I disagree, because they have lost their discounted luxury goods. We've lost market share to France and Germany and others where they can claim the tax back. And that was a deciding factor was that loss of claiming that tax back. So again, I do think that they are just as deal conscious.
Sure.
I'm going to come to Alan. Alan, you've been very patient listening to all thoughts and opinions on the matter. You mentioned earlier that you believe that there will be limited optionality for local mayors, and a question came in earlier, which I thought was quite an interesting angle. Theoretically, could a local authority set the tourist tax at 0 if convinced by the arguments we are hearing?
Well, mayors will have the choice as to whether or not to implement a tourism tax. So they're not going to be forced to do so. But I think it's inevitable that if you devolve only one tax raising power, eventually everywhere will pull it. We know that the Northeast, for example, aren't intending to have one yet, but a change of mayoralty or a change of financial circumstances, and of course they will. I also think it's quite like, the future government says to a mayor, well, you've got a tax raising power which can bring you in 80 million, so we're going to cut the amount that you're given by national government accordingly. I think that's inevitable. I wanted though to add something else to the points that have been made about unintended consequences here and who pays for this, because for most of us, taking a holiday is non-negotiable. We may find that there's a category of customers who still takes the holiday. They still stay in the hotel or the B&B or whatever it is, but they spend less locally. So that £140 per family on average for a UK holiday in the UK, they may still take the holiday. They may still take it in the UK, but it'll be maybe one dinner out less or 2 lots of fish and chips by the caravan park fewer. And what that means is that we have to understand that the negative economic impact of this will affect the people trying to take a holiday, of course. It'll affect the people who run accommodation, of course. It'll also affect anybody else in hospitality who relies on tourists for part of their income, which is how you arrive at an expectation of 33,000 jobs lost. And one final point, if it does end up being 5% on top of, as Tony says, the 20% VAT, the levy itself is vatable. So it means that the sales tax on a holiday in the UK will be 27% compared to in countries who already have these levies, in many instances, only 14, 15.
Just staying with you for one moment, Alan, just to wrap up here. I think it was mentioned earlier, I believe, on the panel. I can't remember who said it, but it's also been mentioned in the chat as well. This was in a particular case around Amsterdam, that the purpose of these taxes is generally to provide municipalities and with additional resources to maintain and improve public spaces and services. However, many residences and businesses struggle to identify where these additional funds are being reinvested. Alan, how important is it that this visitor levy is ring-fenced for tourism, if this is...
Well, yes, I mean, look, it should be. And I know that in London, the intention is that the money is initially spent in tourism development so that hoteliers are made good before everything else is spent. That's a fine goal. But in Liverpool, for example, they are very explicit that it's going to be spent on improving Liverpool for Liverpudlians. And that is just general taxation. I come back to the point I made at the beginning, which is that you can't hypothecate tax. So you say that we're going to spend this money on tourism promotion. You define tourism promotion as including cleaning the public realm, supporting social housing, and so on. The money which would have been spent on those things gets relocated elsewhere. There is a reason economists say that hypothecation of tax is in practice impossible. And we should be absolutely clear that a sector that already pays 75% of its profits in tax compared to, for instance, banking, which pays 35%, is being asked to pay yet more.
Mm-hmm. I'm very conscious of time. So what I'm going to do is flag again that all the LinkedIn profiles of our speakers are in the chat. And unfortunately, we haven't had time to get round to all the questions that have been posted today. You've been a very active audience, so thank you all. We will leave this webinar open for an extra few minutes at the end, just so that you can follow up on all those links, because like I said, there is a lot to get through, and I do want you guys to carry on this conversation. There's more, I think, that we can learn and share. So LinkedIn profiles are there for you to follow up with. Alan, RJ, Janet, Tony, truly thank you so much for your time. Appreciate it very much. Thank you again for your insights. I just have some closing slides to wrap up before I say a final goodbye. The next webinar that I'm hosting, which will be on the 6th of July, is called Why Your Next Employee Could Be an AI Agent. We talked a little bit today about labour and recruitment and the challenges that we are seeing within the labour force. So would love to see you there. Do get stuck in. You can register via the link in the chat. And if you're interested in working with us, please get in touch with my colleague Katie. Her details are also on your screen and also in the chat. So once again, thank you all very much for tuning in. Looking forward to seeing you all again soon. We've got challenges ahead of us, but I'm sure the future is bright. So keep striving, remain resilient. We wouldn't be in this industry if we weren't resilient. So thanks once again, and I'll see you all soon. Bye now.
Bye-bye.
Bye.
Thank you.
At IHM, we believe in the power of connection. We exist to inspire, to inform, and to unite decision makers who are shaping the future of hospitality and real estate. Our why is simple. We believe this industry thrives when people and ideas come together. And we're here to make that happen. So how do we do it? We publish 4 leading multimedia brands, each a trusted voice in its sector. We blend intelligent content, curated events, and a strong community into everything we do, making it easy, accessible, and genuinely useful. From online engagement to face-to-face connection, we're known for being insightful, collaborative, and refreshingly human. We host world-class events, panel discussions, podcasts, award ceremonies, and webinars designed to spark ideas, drive conversation, and create impact. With over 62,000 monthly web visitors, 55,000 email subscribers, and 69,000 social media connections. Our reach is deep and our community is active. We're partnered with the biggest names in hospitality, and we'd love to connect with you. So whether you're looking to grow your visibility, meet the right people, or understand where the market's heading, read, watch, listen, and me. Do it all with